Even if your company turns over £1 million, that's not your £1 million.
Wow.
From 100,000 to 125,000, for every pound you earn, you lose your personal allowance. In terms of people that attack other people for earning so much money, I think the energy that you're using to attack such people, you should use that energy to educate yourself.
I never ever wanted to have this conversation. Yeah. Tax avoidance is legal.
Yes.
Tax evasion is illegal.
Yeah. She paid 0 corporation tax,
That's right.
even though her company technically made a profit of X amount.
Think about some of the wealthiest people that I know. They have some of the lowest salaries, tax the rich, tax the rich. The easiest people to tax are those that are earning PAYE.
If you don't like it here, move. You are not a tree.
Ooh.
You can move. Go and test the waters if you're so sad.
Fairs. I'm black, I'm ethnic, I have to be Labour.
People think that Labour is better for working class people. And this is why I say people need to educate their ignorance. No shade. It is what it is.
Ooh.
I hope you guys are excited to get into this episode. Don't forget, if you would like to purchase an investment property in Dubai, make sure to fill out the form below and book a free consultation with me. Welcome to the Building Wealth with No Borders podcast with me, Lamide Elizabeth, where I'll be bringing you guests from around the world to share their strategies on building wealth. And today we are in London with the viral accountant, who is actually my accountant, Benedicta. Woo!
Who would have thought we'd be here like how many years later? It's been a long
It's
time.
so crazy because I'll be seeing you pop up on my feed. I'm like, oh, what's my accountant doing on another podcast again? And you know, I know you from being your client for ever since I actually incorporated my first limited company since my first property.
Yeah.
So it's been like four
so,
years
yeah.
now.
Before lockdown? Or-
Yeah.
Was
No,
it-
during
was it during lockdown?
Yeah, it was
Okay,
2020,
around lockdown.
2021.
Wow.
So now having you on the podcast, I'm so excited because one thing about you is I can vouch for you.
Amen.
I can vouch for your work. And I have recommended you to many people because you know your stuff. So
Thank
I'm
you.
excited to get into this conversation. And what I want this conversation to be all about is how high earners, business owners, people who want something going on for themselves more than just like your average, how they can be smart about taxes, side hustles, earning, all of that sort of stuff. And I wanted to actually start by asking you if you can break down how taxation works in the UK. Because I think even those of us who are earning through PAYE, a lot of people actually don't even understand how taxes work. So could you do that?
Yes, 100%. Definitely. It's a question I always get, and it's also something that's quite misconstrued. So just to be clear, in the UK, everyone has a tax-free allowance. And the tax-free allowance is £12,570. Now, as long as you're earning below £100,000, doesn't matter what job you're in, you will get that. And that will already be reflected in your pay slip. And then anything you earn from 12,571 all the way up to 50,270 will be taxed at 20%. And that's when you hear people saying, are you a basic rate taxpayer? Or I am a basic rate taxpayer, because the basic rate is 20% basically. And then you have anybody or anything you earn above 50,270 all the way up to, let me stop at 100K. All the way up to 100K, you're going to be taxed at 40%. Now, it's important for me to highlight that it's the money above, because a lot of people, you'll hear them say, oh, if they're going to tax me 40% if I earn more than 50K or more than, up to 60K, then it's better for me. They have this conception that it's better for me to stay at 50K. No, the money up to 50K is still taxed at 20%.
Okay.
It's the bit above it that is taxed at 40%. And so you keep 60%. Now, the reason why I use the 100K as the marker is because you are technically still taxed at 40% all the way up to 125K. However, one thing you have to note is that from 100,000 to 125,000, for every pound you earn, you lose your personal allowance. So that 12,570 that is free, tax-free, you start to lose that. And so
explain that a bit more. What do you mean you start to lose it for every pound?
So basically, let's say somebody earns £110,000. Basically, because 10,000 is above 100K, half of that, £5,000 will be taken from their tax-free amount. So where everybody else is getting 12,570 tax-free, that person is going to have 5,270 tax-free. Yeah. So it's basically what they call a 60% tax trap, because you're losing the tax-free element at the bottom, and then that 10K is obviously also going to be taxed at 40%.
Wow. And then how does taxation differ if you are either self-employed or like a business owner?
So being self-employed is actually very similar. The only difference is obviously you don't have a PAYE. You're still going to be having the 12,570 tax free. You're still going to have 20% up to 50,270. You're still going to have 40% up to 100K. The only difference and benefit is that when the money comes in, let's say you're a sole trader, I don't know, you're a gardener or something, I don't know what you're doing, but you're earning money. Let's say it was up to 100K revenue. Yeah. You can of course take away your business expenses. So let's say to earn that 100,000, you had to buy tools, you had to buy petrol, whatever it is that you needed to do to run your business. Let's say all of that came up to 30,000. So you would say 100K revenue, take away 30,000 expenses, and then you're going to have 70K. So it's the 70K that we would then apply the 12,570 tax free, 20% basic rate, 40% higher.
Okay.
And just to throw another spanner in the works for everybody, if you are earning over 150,000, then you pay higher rate, which is 45%.
Wow. Nice. We're gonna get a bit more into that. So then what about business owners? So they have a limited company set up.
Yeah. So that's completely different so the rates are the same, but it's different in terms of how you access the money. So self-employed, that money technically is yours once you've paid your business expenses. So you pay the tax, PAYE, obviously that's coming to your bank account. Now with a limited company, the money is going into the company. And although you might be the owner of the company is considered to have a separate identity. So even if your company turns over £1 million, that's not your £1 million. That is ABC Limited £1 million, right? You might be the owner, but you don't have the right to just take it. And I always use the example. Imagine if you have shares in Amazon or McDonald's and you're paying to invest in that company. You don't expect Jeff Bezos to be using the company card for his personal family holiday, do you? He should have a salary and he can spend his salary on his children, for example, or his wife or whatever. So it's a similar thing. You have the company ABC Limited over here. The money goes in there. So now you have to apply, quote unquote, for that money. So you're either going to put yourself on a salary, so whatever salary you deem fit, obviously you have to speak to an accountant, work out all the taxes and all of that, or you pay dividends. So as an accountant, most often we would recommend that you give yourself a basic salary. And I think we're going to talk about that a little bit. We recommend that you give yourself a basic salary so that you avoid some of the taxes that are due. And then you take out the rest of it that you need for your day-to-day living. You take it out as a dividend. Now, the business will pay 19% corporation tax. And then as long as you leave it in, that's it. The income tax need or requirement is triggered the moment you take the money out. So for as long as the money's there, the business has paid 20%, 19% corporation tax, that's fine. But when the owner of ABC Limited comes and takes the money, then it now becomes his income. So then his income is now subject to all those other tax rates that I just talked about.
Basically fall in again to the same tax bracket as
exactly,
the self-employed.
12,000 tax-free, 20% basic rate. However, if he takes it as a salary, if you take it as a dividend, the dividend tax rate is a lot less. So what we would recommend, for example, let's say you want to pay yourself 50,000, you can do 10,000, for example. I'm just rounding these numbers for sake of argument. 10,000 as a salary. Obviously, that's still within your tax-free threshold, so you're not going to pay any tax on that. Then you can take the remaining 40% as a dividend. That 40%, guess how much the tax rate is? If you was earning 9 to 5, it would be 20%. On dividend is 8.75%. So this is how you're able to pay less tax than if you was earning that 50K outside as a 9 to 5 employee.
You see, we are going to get into this because this speaks to a wider, I don't want to say issue, but conversation where it regards to, well, is corporation tax still 19%? I thought it went up.
So it's 19% on profit below 50K.
Okay.
So as long as your profit is not more than 50K, you'll still pay 19%. If if you have the privilege of having profit above 250K, you're going to pay 25%. And then if you earn between 50K and 250, there's something what they call like a marginal rate. So they'll calculate depending on the percent, depending on how much, they might say, okay, pay 21% or pay 23%. So in between 50 and 250, it's adjusted based on how much. But yeah, the basic, it's almost like bringing in a basic and higher rate, right? Like 19 and then 25%.
Okay, fairs. I want to talk a bit more about strategy, right? So in the last podcast that we had with Tayo, he was kind of mentioning like, once you hit the 50K, you might as well start a side hustle. And based on some of the stuff that you've already said, you can see why someone might start thinking like that. Yeah. What would your advice be for someone who is at that 50K mark?
Yeah.
would you just say, no, it's okay, like keep earning, keep going for higher positions, like it's still worth it in the end? Or would you say start getting smart about your finances? And if so, what should they start doing?
Yeah, so that's a really good question. And I like Tayo, by the way. He's a good friend. So yeah, shout out to Tayo. He's an entrepreneur through and through. So I know he'll be like, 50K, open up your business. It's not bad. I do recommend that, but I wouldn't say it should be in replacement of.
Okay.
The reason why is in the UK, we already know, people, we have an obsession with buying property.
Yes.
50K salary on a mortgage. Obviously, if you're buying with someone else, maybe it's fine. But if you're buying by yourself, I'm sure you can testify. Will a 50K salary really get you the mortgage that you want? So I would say you should still stretch. I would say for me, my cutoff would be 100K in terms of PAYE. But like I said, I don't think it's a replacement. So I would say that if you have a side hustle, you can still, if you can get promotions at work, why not? It's still money into your bank account. Go for your promotions and all of that. But to be fair, regardless of whether you earn 50K, 100K or 25K, I think you should have a side hustle or a side business.
Okay.
And so I would say that at the 50K mark, if you are into something else, a side hustle, a business that you want to open, definitely it should be a limited company business. So for example, if you were earning 30K salary and you had a side business, you could get away with still doing it as a self-employed person because you still have more like basic rate. So you don't have to open a limited company. But once your salary hits that 50K mark, 100% put your extra income in your limited company. However, I would just add to Tayo that I don't think it should stop you from getting promotions and getting a higher salary. There is a number that I think you should start reconsidering, but we'll talk about that.
Let's talk about it. So at the 100K mark.
Yeah, at the 100K, because of what I just explained before, right? You start to lose your 12,570. So at the 100K mark, I want to believe you're working for a decent company. You've got decent benefits, healthcare, all of that kind of stuff, company cars, whatever extra benefits that they're going to give you that's going to take money from your salary. Once you're earning over 100K, you better go for it. So I would say that in terms of what goes into your bank account, net after everything, let it be no more than 100K. So example, I talked about somebody who earns 110K. You earn 110K, if your company is offering you monthly car scheme or something, they're offering you season ticket loan, if they're offering you extra pension contributions, whatever it is that you can do, that you can pay for, that's still a benefit to you, but will reduce your cash, then I think you should do that to get rid of that extra 10K so that you're not losing on the free 12,570 at the bottom.
Why did you say that? That's really good advice, by the way. I hope you guys are taking notes. Why did you say that you still believe that everyone should have a side hustle?
Oh, because you should not be relying on one income stream. No matter whether your income stream, even if it's a business, £1 million business, don't get me wrong, like it's amazing, but something could still happen tomorrow that could mean that one business is no longer able to pay you. And similarly with your salary, even if you're on a salary where you're earning 2.5 billion, I don't know, million or something, there should be an additional stream that is not tied to that. Like we have seen through time, through history, there's always economic crisis. Yep. There's always recession at some point. The business that's £1 million business today, unfortunately, we don't pray for it, but unfortunately, like in 10 years time, that might not be what people want anymore. There might be new businesses. So the idea of diversifying, whenever you're making profit or income, you should be looking for other streams that are not necessarily related. Of course, you can invest in related streams as well. But you should also look for neutral streams that have nothing to do with where this money is coming from.
Because of that correlation, right?
Yeah.
That makes a lot of sense. So we're talking about people who are making 50K, 100K. A lot of people, especially in the UK, would say that is a lot of money. That's a lot of money. But then when I think about some of the wealthiest people that I know, they have some of the lowest salaries that you will come across. Some of them are millionaires by net worth, and they will have a salary of 12,750 so that it's tax free, right? And I remember having a conversation with another millionaire, and she was saying that like I can't remember what she was being. I think maybe she hit into someone's car, and the person was like that she's going to sue them or whatever. And she was like, "Oh, they can sue me because when it comes to what my salary is, I have no money." She was like, "I have no money, so like they can sue me." And this conversation for me is something that like it's so. And when I really started to understand like wealth and money and taxation, this was the part that blew my mind because even when I was working in banking, a part of what I would be doing is going through like the company structure and stuff. And then you just start seeing, oh, there's this little offshoot in the Cayman Islands. Oh, there's this little offshoot in these places, Bermuda. And you're like, wait, there's no revenue coming in from these places. Why are there so many companies set up
Disbursements.
in all these places that you don't do any operations in. And then you start realizing that when you don't have the restraint of being paid by an employer, a lot of those people take advantage of all of these different structures that are out there to prevent themselves from, I don't want to say being screwed by the taxman, because I don't inherently think that tax is a bad thing, but they can be a lot more strategic with their money to retain a lot more of their wealth.
Yeah.
And that's when it really starts to become unfair. And I feel like we really, like a lot of people really don't understand this. And I thank God for, have you seen Gary Stevenson?
No,
You haven't seen, there's this, he recently did this debate on the Diary of a CEO.
Oh, yeah. I saw it. Yeah, I know what you're talking about.
Yeah,
I saw it. I didn't know that was his name. But
that's his name. He's Gary. I think he is one of the people who's really pushing this conversation in terms of like the difference between a high income and wealth. And I think people are finally starting to open up their mind to actually, what you think is wealthy isn't really what wealth really actually is. You just think someone with a high salary, oh, this person has so much money. You don't understand wealth and the levels of wealth that are out there. Yeah. So one of the things I wanted to ask you is, because I also remember that Patricia Bright did a video, maybe during COVID, I think when she was running the break, and she was saying that her salary was like 65K, for example. And people in the comments were like, only 65K? Like, I thought like you're this and that. I thought she's a millionaire. Why is she paying herself 65K? Can you kind of explain what that is about?
Yeah.
You kind of have already, but yeah.
So it's basically exactly what you said. Like, when you take a normal salary, I just talked about the 20%, the 40%, even 45%. When you take a normal salary income, that income is subject to all those tax rates. But the dividend rate is a lower tax rate. So a dividend rate at what is basic? What is basic for income? The tax rate is 20%. What is basic rate tax for dividend? The tax rate is 8.75%. So there's a massive difference of what, 12%, 11% that you're saving by not taking your money as a salary and taking it out as a dividend. So dividends are paid to company owners. They're not paid to employees. You have to have a share or some kind of investment in the company to be able to draw a dividend. So that's why you see many people who own companies not taking or taking a low salary and taking a dividend. The other thing is as well that there are expenses you can run through your business that you can have as an expense to reduce your tax bill, and then you're taking your dividends afterwards to just pay for anything else that doesn't fit the box. So what do I mean? I'm sure people hear about, company owners going on holiday or traveling. They go on this business retreat and they go on holiday for like a week and do maybe like 1 to 2 days worth of business, and then the rest is a holiday, right? Because what they try to do is they set up their lives, or you can set up your life in a way whereby your business has justifiable business expenses that benefit you and your family, that reduce your corporation tax, and then allow you to take out, again, smaller amounts. If your business is paying for your car, your business is paying potentially for your house, depending on how you set that up.
Yes.
If your business is paying for what else? I don't know.
Company lunch.
Exactly. Company lunches, whatever benefits. If your business is paying for all of that, to be fair, do you really need a high salary? The reason why you need a high salary as an employee is because your company's not paying for all those things. You have to pay for it. But if somebody else is paying the bill, you're still enjoying all the benefits. It's just not coming from your personal bank account. And so you can afford to take a low salary to pay for, I don't know, your weaves.
Yeah, literally. And it's so interesting because there's so much that goes into it, because not only one, can you run a bunch of expenses, and when you're talking about, potentially being able to write off your house as a business expense, potentially being able to write off your car as a business expense.
Get advice to do that, by the way.
Yes, we'll get into that.
You can't just do that.
We'll definitely get into that. But when you're able to write off such these are big expenses, because when it comes to most people, their 3 biggest expenses is going to be housing, transportation, and food. Yeah. If you can already start to write off some of those as a business expense, which when you're then looking at the income statement, that's going to reduce the amount that your tax liability is. You're already, again, minimizing the amount that you pay for tax. And then when it comes to the amount that you're actually taxed, you can then take out a salary that's lower than, that's not even taxable. You can take out the tax-free allowance. And then the part that you want to take out above the tax-free allowance, you can then pay a much lower tax rate that's less than 10%. Exactly. And that's the benefit that business owners have, that a lot of people, and this is why I say when people are attacking people because you're making 100K, how dare you complain about this and that? Like, that's not...
And by the way, they're making 100K, but you don't actually get the whole 100K in your bank account.
As in...
Like, half of it is taken away via tax anyway. So, but I think that in terms of people, this is just a general side point now, in terms of people that attack other people for earning so much money. I think the energy that you're using to attack such people, you should use that energy to educate yourself. No, honestly, it's no shade. But because when you don't understand, people attack what they don't understand.
It's true.
If you understood it, you'd be clapping for that person and you'd be in their DMs like, can you help me so that I can earn 100K as well? That's what you should actually be doing.
Honestly. And so, and this is why obviously like there's so many benefits. And that's why when we talk about wealth, one of the things that I always mention is wealth is ownership. What these people are able to do through these companies. This is what happens when you own things. You can run the show. And you can hire people like you to then help you. Okay, how do I pay less tax? I've come to you and said, Benedicta, come on. I want to pay less tax. And so let's talk about that, because people also like get onto people when we talk about tax avoidance. But tax avoidance is legal.
Yes.
Tax evasion is illegal.
Yeah.
So let's talk about that. What is the difference between tax avoidance and tax? I remember when I did one accounting module in uni, and I always used to get it mixed up, like which one is. But yeah, can you talk about tax avoidance and evasion?
Think about it this way. Evasion, it's like when you hear, oh, someone's evading the law, so it's illegal. Evasion, that means you were supposed to do something and you literally just decided not to, or you did something dodgy so that you don't have to. So tax evasion is illegal. Tax avoidance. So it's like they're being, I don't know, think about it from a driving point of view. There's a camera. To avoid being caught for speeding, you slow down whilst the camera is there. Oh my God.
That's a good example
and then when the camera's not there, you might decide to speed up. I don't do that. She says, God, please forgive me. That's avoiding the penalty. Yeah. That's not illegal, right? There's nowhere that says, oh, if you only drive slow when the camera is there, then you're going to be in trouble. Like that's not. So this is what we're doing with tax avoidance. We're looking for all the laws. Like I just said in the example, the legal tax rate for paying yourself dividend is 8.75%. If I choose to take my my income as a dividend rather than a salary, that's not illegal. I'm choosing the lower rate, which works better for me and my family, as opposed to choosing a higher rate, which is going to cost us more. That's what tax avoidance is. That's an example. It is also part of the law that a business can take away all of its expenses for the purposes of running the business before it pays tax. That's not illegal. But if you anyway, well, if you decided to, I don't know, just do something dodgy whereby like you're with your employer or something, like basically you just have to know the laws. When you know the laws, that's when you can legally choose the ones that are better for you. We're not saying that you don't pay tax. Like you said, I don't inherently believe that tax is wrong. I believe that tax is good. There are countries where the tax system is not working, and so therefore the country is not working. And so I do believe we should be paying taxes, but we should do it in the optimal way, which everybody has a free right to do.
Yeah. And so when you hear about tax avoidance, there are so many things that you hear like about arts, or you hear about giving to charity.
Yeah.
I've heard stuff about buying certain cars.
Yeah, electric vehicles.
Yeah, can you tell us a bit about that?
Yeah, so if you buy an electric vehicle in the UK, of course, everyone knows there's this like hype to try and get emissions and everything down. And so in order to encourage people to go for electric rather than diesel and petrol, when you buy an electric vehicle outright, you can basically have it as a full business expense, i.e. from your company. So if you buy a company car that you obviously need to run your business, then it's a deductible expense. Whereas what we were just talking about now, imagine if you went to go take a salary and then try to buy a car, you'd have paid tax on the income first, and then it's whatever's left that you would have used to buy the car. Whereas now, assuming your business can afford it, then you can buy the car straight out in the company's name, because remember, it's not yours, it's the company's, in the company's name, and that's a valid business expense. And imagine you're buying a 60K car or a 50K car. You can completely wipe out your profits, basically, and pay zero corporation tax. I have a client who's done this, and maybe other people have heard this on like other episodes. One of my clients, she had a 9-to-5 job, and she also had a limited company, and she was very okay. Like she can survive on her 9-to-5, and her company was making, a decent amount of profit. I think at the end of the year, we worked out she would have had 25K profit. And so just before the end of the business year, she transferred the whole 25K, 25K. She transferred that to her pension. A pension that's going to the director of the business is a valid business expense. She paid zero corporation tax.
That's right.
Even though her company technically made a profit of X amount. So it's just about knowing these kinds of expenses that are allowable. Charity is also another one. You can do charity. In the UK, charitable donations are supposed to be tax-free. And so, if your company is paying to charity, it is allowed. It's a tax deductible expense. And so therefore, if you think you're going to have X amount in profit and you have a charity or whatever, a lot of people give to their churches, as long as your church is registered, then you can send it to them and you're going to pay no tax on your company.
That's so interesting because I also see a lot of people who like go through companies' house and try to figure out like what businesses do. I'm like, you have no clue. You can read those statements. Only the accountant can really tell you what's going on. You don't know anything from that.
Even for my customers, we do a detailed account. So we have a full working paper that has like all transactions and we do a detailed account. But what we submit on Companies House is like highly summarized, like so that it's just like high level. It's not illegal. That's what's the requirement. Again, understanding what needs to be out there and what doesn't need to be out there.
So, okay. So what about art? I always hear about art.
So art, not just art, gold.
Okay.
You can invest in, a lot of people, what they will do is they'll take their money, even like Rolexes and stuff like that. Again, let me not go too crazy because some people will literally go out and start buying crazy stuff. But yeah, you can basically invest in assets that will appreciate. And art is obviously an asset that would appreciate depending on what you buy. So is gold. So are like Rolexes and stuff. And so people tend to take the profits of their company potentially, and this might get a little bit complicated, but you can open up like a holding company that owns a trading company. Trading can be anything. Like maybe you buy and sell shoes, property, investments, whatever it is. But this is where all the money happens in and out, right? But there's a holding company up here. The profits from this company down here, which is we call a child or subsidiary, can actually be moved up into the holding company. And the holding company can then decide to move it down to another parent company where things are bought, so that property that company now might be an investing company where things are bought, things are sold. Because it's happening between family members, there's no income tax charge. But if you took the money from one of the companies below into your name, there would be an income tax charge. But because
what do you mean by family members?
So you've got what we call a parent company and a subsidiary, which is like a child company. So that's why I say family members. Because you've got the parent and the child.
Do you know what? So funny. I heard you say this in another podcast, but I thought you actually meant like brother and sister.
Oh no, so that's separate. We can talk about that within the company.
Okay,
so for example, you can put your family members on in your actual company.
Okay.
But when we talk about parent and child, I'm talking about like the company. So these are 3 companies.
Yeah.
But this is a parent company, which could be a holding company.
Okay.
2 subsidiaries, which are like children. And so whatever this company makes can be moved up there and moved down there. Yeah.
Smart. Okay. So one way that I always hear a lot of people talking about whether to set up a limited company is when it relates to buying investment properties.
Yeah.
There's a lot of confusion around that. Like, should I put in a limited company or not? What would your advice be?
So after you own your personal property that you live in by yourself or with your family members, any other property that you buy purely for the investment purposes should ideally be in a limited company because of what I just explained. Like when the company buys a property, all the income, all the assets, like all the rent, and then if you were to sell that property, it's all held in the limited company. Remember that the limited company tax rate, depending on the amount of profit, is 19%. But if you did that in your own name, you would have to pay potentially 40% tax or even 20%, which is still 1% higher. But again, within the limited company, you can then potentially take that money and keep on reinvesting in other properties. And because you're doing it all within the business, it's considered as a trade as opposed to someone buying and selling and making profit and then being liable for tax. So if it's purely for investment, it should ideally be in a limited company.
Okay. What if the person only wanted to buy just one investment property? Would you say it's worth then? Because obviously when you have a limited company, then you maybe have to pay for an accountant and all of that stuff. Is it still worth it?
So honestly, we would have to do the numbers because it will also depend on your personal circumstances. Like, do you have other income? If you don't have other income, it means that your personal allowances, your basic rate is still very much available. But if you are a high rate payer already, then it means that all your personal allowance, your basic rate allowance is already eaten up. So literally every pound you're making from the company is going to be taxed at 40%. But if you're someone who you only have 10K salary anyway, then actually it means that there is quite a bit of a buffer there that if you was to make money from the property would be taxed at 20%. So in such cases, you can argue there's not really that much need to open up a limited company.
When it comes to limited company and then passing on to, let's say, generations or children or whatever? Is it a lot easier to do that?
100%. Yeah, 100%. Because you're not necessarily passing over or passing down like the deeds of the house and stuff like that. What you're doing is you're just changing who owns a company. So you change the shareholders from you, maybe your spouse, or maybe just you, and then you put your children on as shareholders and remove yourself. And it's literally more of an admin thing as opposed to there having to be a sale and again, inheritance tax and stuff like that. Yeah.
If you're enjoying this content, please don't forget to hit the like button and subscribe. And if you would like to become an international property investor in Dubai or in the UK, the link to book a free consultation will be in the description box below. If you're not quite ready to invest yet, check out the affordable video courses that will also be linked in the description box below. And if you would like to relocate to Dubai, set up your business in Dubai, or anything else related to relocating to Dubai, check out www.theprofessionalnetwork.com.
Another question that I think comes up a lot with limited companies is people are like, oh, but I can't set up a company because I don't already have a business. So they don't understand that they can set one up to buy. Like, this is the question that people are like, but I don't have a business, so how can I set up a limited company?
It's called an SPV, a special purpose vehicle. So basically, you are literally setting up the company to buy the house. That's literally, and the trade of the business you have is that you buy property and rent the property out. That's a trade. That's a valid trade. So yeah, that is the business. It doesn't have to be, it shouldn't even be a normal business. Because if you're doing, let's say you bought and sold clothes, for example, and you decide to buy a residential property to rent out, what's that got to do with buying and selling clothes? Like, it doesn't match. So this is another thing that comes up. A lot of people who are doing one particular trade might come to me and say, oh, I want to buy a house. Can I buy it with this company? No, because that's not there's something called SIC codes. And the SIC code is basically where you're telling HMRC, telling the government why you set up this company and what it is for. If your SIC code says you're buying and selling clothes, I don't understand why you're now renting out property. Unless there's a clear like reason, oh, we bought our own property to have our shop or whatever it was. Do you get what I mean? So if you're literally just going to be, there's a SIC code for buying and selling of real estate and renting of property. So that's the kind of company you'd be setting up.
That's interesting. So what if someone has, like, let's say they're a full-time, someone who's self-employed, but they have multiple streams of income, or let's say they're just starting something, they're not exactly sure. Let's say one day they are doing courses, but then maybe they want to start, I don't know, doing brand partnerships. And so there's different income streams and, you know, they're not necessarily exactly what the person has set the company up for. How do you like decide to open another company or put it all within one?
So in the UK, there's, we talk about being like a sole trader or self-employed. You can be self-employed and have as many income streams as you want. So especially if it's early days, like no particular stream is making you like 50K, for example. You're trying different things here and there. So you can actually just be registered as self-employed. And so we can bring forth your brand deals. We can bring your buying and selling of clothes. We can bring your rental property. Like we can bring that all under the umbrella of self-employment. Where I would say that you should definitely do the limited company, again, like I said, is if your personal allowances, you're already earning 50K solid, that's guaranteed to come in, then you want to put it in the limited company to avoid that 40% tax trap.
And so if they then had that limited company, but then they were doing all of these different things, what kind of company would they be setting up?
So if you set up a company, you shouldn't be doing all those different things unless it's related. Okay. So I'm trying to think, using myself as an example, as an accountant, right? My main trade is doing accounts for people. However, I get paid to speak but about finances, right? So that's still related. I can put that through the company, right? Because it's all about the same thing. Yeah. But if I decided to go and buy and sell clothes or shoes or something, then technically I should either set up another limited company or I can do that as a self-employed person.
Okay.
And so as a self-employed person, when we do a self-assessment for you, we would be including your 9-to-5 income if you have it. We would be including a dividend income from your company. We'd be including income from buying and selling of clothes. We'd be including income from even like in interest profit that you've made. So the self-employed route or the sole trader route is like a catch-all. So I would say that when one particular source starts to get up to that 50K, that's when you start thinking about different companies. And if you have multiple streams that again start to get to certain elements that would mean that the income is taxed above 40%, then you can start opening up limited companies for each of those different things.
Okay. So what if you started buying and selling clothes, but the clothes said like world's best accountant and it was merch?
Exactly. So that I would put that in Benny ratio.
Okay.
Because it's like you're seeing him into my my notepad. I actually want to do accounting merch.
Oh really?
Yeah.
No way. That is hilarious. For who? For the other accountants?
Literally for
I
whoever.
love that.
So the other day, if I permit me to share this joke, I don't know if you include it in the live, but so I was talking to someone and they said something about, oh yeah, I'm going to do this, that and that. And then we're going to have some money in the bank. And then there's a phrase in accounting, only accountants will get it, but it's called cash in bank.
Yeah.
It's like literally a line on the item. So yeah, I wanted to like do a joke and put like cash in bank. Only other accountants will get it. But yeah.
Very nerdy joke.
That's one.
Okay. So, going back to the self-employed person, yeah. So let's say someone who has got a 9 to 5, but then they're also doing brand deals. Maybe they're a bit of a content creator. What would be the incentive to register that income that they're getting into their personal account? As what would be the incentive to do a self-assessment return? Like, why can't I just take all that extra money and just bank it and like not tell HMRC? Like,
because that's tax evasion. That is actually tax evasion.
Wow.
Because the what's it called? The law says that if you have any income above £1,000, it should be registered. Now, many people get the tax-free allowance mixed up with the £1,000 trading allowance. So just because you've only earned 10,000, let's say you had no other income, but you earned £10,000, people think, oh yeah, but there's no tax to pay, so I don't need to register it. That's not how it works. As long as the income is more than £1,000, it should be registered. The truth is, yes, when we do your self-assessment, it will say zero tax to pay, but technically you are supposed to still do the self-assessment and submit that self-assessment. So if you are earning money above £1,000 and you haven't registered, you haven't you told the tax man, you haven't put it on a self-assessment, then that's tax evasion. And that is illegal.
Okay, so obviously this podcast is called Building Wealth with No Borders. One of the things I also like to talk about is kind of building an international portfolio, right? So let's say, and one of the strengths that I think, because we talk a lot, there is a lot of conversation in general about all the negatives of being in the UK, tax being one of them. But I think one of the strengths that you have in the UK is earning in the pound. And I think that's a huge strength because it's one of the strongest currencies in the world. Yeah. So let's say there is someone who is thinking to move internationally. They want to move to Dubai, but then they have a portfolio in the UK. And they want that portfolio, let's say a property portfolio or some sort of investment to fund their lifestyle. What kind of considerations will they need to put in place to be able to do that? Where should the money come from? And then also, can we also talk to if they are no longer a UK tax resident as well? What would the impact of that be?
So there's something called the remittance basis. I'll start with the end of the question. There's something called the remittance basis, which basically means that if you are no longer in the UK, or even if you are in the UK, actually, it's only the money that comes into the UK that is taxed. So that's if you have other investments outside. Yeah. So just because if you live in another country and you have assets there or whatever, and you might have been a UK resident, doesn't automatically make all of that income taxable in the UK. If you've already got a portfolio here, I would highly advise that you keep it, especially if you've done it properly. It's in a limited company. It's not necessarily in your personal name. I wouldn't also say you should sell property that's in your name, but basically keep your UK assets because of what you just said. I call it the Great British Pound, right? It really is great. Like, it's one of the most stable currencies. And I think I said this before on another podcast that I would advise that even if you're going to move out, you should still have roots in the UK because it's one of the economies that the government cares, and they will always, even in the midst of a crisis, the government will always tend to try and do things to stabilize so that your assets don't lose as much value. Why? Because obviously they've got investments in the UK as well, right? And so you should still be invested in the UK. In terms of like money flows and stuff like that, you would have to. Each country is going to be different. So when you get to the country you're going to, if you're going to America, you're going to Portugal, you're going to Dubai, whichever one, you need to find out from them what their laws are. If you bring money from the UK, obviously you've got investments here. You've got rental income from tenants. If you bring that money into Portugal, for example, what do they say? Do they say it's taxed? Do they say it's not taxed? So you literally have to go country by country. It's not one blanket rule.
Yeah. Okay, perfect. Amazing. Is there anything else that you'd want to share with the people when it comes to taxes, especially with those who are in the UK? Because I feel like there's people feel like a sense of like doom. I feel like there's a lot of negative energy in the UK of just like, oh my God. And then obviously like even as an investor in the UK, is it today? In 2 days time, then our stamp duty rate goes up. And it's just like, give us a break.
I know.
What advice could you share?
It's a bit hard because I'm not going to lie to you. I think I've kind of been having that feeling as well. Like really, funny enough though, before all this craziness happened, I never actually wanted to always live in the UK, but that's a different topic. But I think that as investors, like I said, we just talked about the strength of the economy, the strength of the pound. Be glad that if you do, especially if you do have assets here. But if I'm honest, this is going to be so controversial. I'm not sure if this is hope or not, but we've all heard the phrase, you are not a tree. Ooh. You can move. Like the world belongs to everybody. If you don't like it here, move. Like literally. That's my advice. Like try something else. The funniest thing is, right, I have also heard, as much as there's this a big hype at the moment. I don't want to say hype, but there's a big wave of people leaving, right? As much as we've heard that, I've also heard people moving back to the UK.
Also true.
Yeah. And that will have to do with things like family.
Yes.
That will also have to do with school. Yeah. So like you can there's nowhere that says that the days of our parents and that generation where you have a job for life, you literally work your way up the career ladder, you live in the same town, the same city, the same everything, the same country. Those days are over. Like we live in a global world. If you move to Portugal, you move to Dubai, you move to America for 3 years, for 5 years, and you don't like it, you can come back. Like, go and test the waters if you're so sad. Like, go and test the waters and see if you like it. Who knows? You might go out there and love it and be so happy. And, it's the best thing that ever happened to you. You might also go back there and be like, you know what? I actually like Costa. I actually like being able to get on the train, on the tube.
Yeah.
We have a very good transport system, even though we might complain about it. Other countries don't have that.
Thanks.
I love going to Nigeria, for example, but after a couple of weeks, I actually want to come back to the UK. I actually want to come back to the UK because there are some things that just work in the UK that just don't work out. They don't get me wrong. I love Nigeria. I love 100%. The food.
Have you been to Abuja?
Yeah, of course.
You just lit.
Oh yeah, we were talking about this the other day.
Oh, we were.
Yeah, my husband's family, they're all from Abuja. So like literally all the time. And it's so much, but I can't remember the last time I went to Lagos.
Is it?
Yeah, since coming to Abuja, I literally don't go to Lagos. But you can have more sanity anyway, let me put it that way.
Yeah.
There's still some things, but yeah.
Yeah.
But even after being there for some time, because you know something else, I'm like, oh yeah, do you know what? I literally just want to go somewhere where like the customer service is better, for example.
There's nothing like home at the end of the day. Yeah, I really like that. And I think that's one of the key points of this podcast, right? It's like, you can go.
Look at what you're doing.
Like
literally, like I think that people should be more adventurous and people should be less like, oh, woe is me, I've got to stay here. The country I live in is so bad, blah, 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 blah. Our parents came here. Many of them were not born here. They came here for greener pastures. If this is not your
greener pasture,
go find your own greener pasture.
Literally. And I also think with the taxation, right? In terms of this whole conversation about like money and stuff, knowing that you're in a tax system that might not be the most favorable for, and I think sometimes people try kind of like, someone the other day, this was not the other day, it was like maybe like last year or something, commented like, oh, I know you're a conservative like voter. I was like, first of all, like what? Like, and it's just like people, when you talk about taxes and like the taxes being a lot, everyone's like, oh, well, you must be a conservative. It's like, no, I'm actually someone who is trying to break out of, I guess the financial limitations that has been placed on the family that I'm in and trying to do better for myself, but I'm finding it so hard to move from it, which is why I'm saying, and especially then having the knowledge of how wealthier people are able to pay 8.75% in tax and pay a lot less in tax, knowing how hard I work and how much of my money then goes to tax, I'm more like, okay, I need to be craftier and smarter about the things that I do to.
By the way, talking about that whole conservative Labour bubble, let's talk about that bubble, right? Because people think that Labour is better and is more, better for working class people. If you look, and this is why I say people need to educate their ignorance, right? If you look, sorry, no shade, it is what it is. Oof. If you look at what Conservatives did in whenever, especially during like COVID and all of that, if you look at what they did to the economy, I'm not talking about what they did in Downing Street parties or whatever. I'm not talking about that, yeah. But if you look at what they did for the economy, they actually helped more people to buy. They actually helped a lot of people. They reduced stamp duty. They increased the borders. Now that Labour has come in, your favourite Labour, that you think is on your side, they've actually made it harder for people to buy properties now, literally from the 6th of April. They've also increased the NI rates for employers. Most of you that complain about Conservatives are employees and don't have businesses. And so if your employer now has a higher tax bill, do you think that they're going to give you a pay rise?
Do you know why there's redundancies left, right, and centre?
Right. So let's educate ourselves and talk from a place of being informed.
You know what? Yeah, I never ever wanted to have this conversation because I feel like people would be like, oh, it's just because, you earn this amount, you don't want to pay taxes, whatever. But this conversation, when I tell you, I grew up in Hackney. We have voted Labour forever. And this is not a Labour is better, Conservative is better, or any sort of conversation like that. But it wasn't until I got to LSE, and then it's a social, political sort of university. And then people would be like, okay, you vote. You say you're Labour, right? And they start asking you questions like, what are your views on? And they start challenging you and they will be like, oh, you know what? That actually aligns more with this party. Exactly. Or what is your... And then you just think that, we just kind of think, oh, I'm black, I'm ethnic, I have to be Labour. But that's if you actually start breaking down the policies and start understanding, you probably realise that you're not as Labour inclined as you think. And right?
Thank you. Do you know what? That was actually a reality for me, especially in the last couple of years, doing what I'm doing and intentionally going out to find out what the policies are, what the changes are. Like you, my whole family is all about Labour, right? But actually, as I've grown up, I've started realizing, and as I've been more informed, actually no.
And I remember one question that someone asked me was like, oh, because they were I think at this point when I was in uni, people were talking about the abolishment of student loans. And I was like, yeah, abolish student loans. And then they were kind of like, okay, so where does that money come from? Do you know that when you say these things, you know that the government then has to find that money elsewhere? And then do you know what the impact and I just started, and this is about critical thinking. When you actually start thinking about the different parties and the policies and the impact that it has, you start to, because I remember, and I listened to other podcasts and someone was like, oh, my boyfriend is a Conservative. I don't know if I can date him. And I was like, that's such a limited mindset. You don't even know, that's, and I bet you that person, if you ask them, tell me 10 of the Labour policies from the last election, they won't be able to tell you.
And this is the thing. So don't get me wrong, I feel that because I talked about this in a recent one, and do you know what? In the more and more recently, I've realized how much politics has started to come into the finance discussions. But the Labour government are good at having the headlines for working people. Exactly what you just said. When you say you're for working people and we're going to give this allowance, we're going to put this in the NHS, we're going to do this to schools. And don't get me wrong, those things are very much needed. But you need the economic policy to also be able to back that up. It's not just by saying the things that will get the votes. There has to be reasoning, like you say, behind it. And so that's why also I would never sit here and say, oh, we shouldn't pay taxes. I don't believe in that. You have to pay taxes because like you say, there are things that need to be paid for. But what policies will make it fair for everyone? And I've said this multiple times. When I did a live last year, I said a lot of people want to get at because they earn a lot, we should tax them and stuff like that. And nobody who just sits there on their bum, just all of a sudden now I earn 100K. No, they've done something. They've worked their way up or whatever to be able to earn 100K or whatever salary it is. And I think that we should be careful not to penalize people who want to progress and penalize people who actually work hard.
Yeah, and I think just on that point, and this is why the conversation that we were having before on the difference between income and being rich and wealth is because people assume that, oh no, they're earning this amount, like they would, and this is not to say that people who are on a low salary don't work hard, because there are NHS workers who can work very, very hard, and still 100%. Because of the I guess the infrastructure with which you're earning money, there's a cap on how much you can earn. But there's you're confusing people who are making 100K as being the wealthy versus people who just inherited wealth, don't do anything, maybe sip pina coladas on a beach all day.
That's completely different.
But you're conflating the two. Oh, this person who is earning 100K, they're conflating that with someone who has inherited money and probably hasn't worked hard for it, right? Yeah. So I think that's why you have to understand this difference between income and wealth and what you can do under a company as a business owner versus what happens when you're in PAYE. And another thing, right, when it comes to, just quickly round up this conversation on politics, when it comes to political parties like Labour, for example, when they're talking about tax the rich, the easiest people to tax are those that are earning PAYE, because if they say tomorrow that we want to increase the taxes, there's nothing you can do.
Absolutely
nothing. The rich people, they're going to call their accountant, listen, they're saying they're raising taxes. What can I do? And they will avoid it. But those of you that are on PAYE, you are the first people to be hit because there's nothing you can do about it. They can implement tomorrow. Your company will have to pay them that money.
That's why I talked about having additional income or having a business, because yes, they can do that to your 9 to 5, but if you have a business as well or another source of income, hopefully you might be able to avoid some of those things that happen that are beyond your control. Like,
Right.
yeah. No one should be relying on one income stream. That's just my opinion personally.
This was such a good conversation. So let's move on to the final section. But before we do it, let me just clarify. We're not saying here that we're anti-Labour, pro-Conservative.
No.
And unfortunately, in the UK, there's actually many more political parties.
I know.
But we only ever talk about those two because they're the only two that alternate.
We need to make another one.
Honestly.
I think they were talking about the reform. Was it reform? I don't know.
Reformer Party, Lib Dem, Green Party, UKIP.
Oh.
There's a lot, but we only really talk about the two extremes.
We should just inform ourselves, basically.
Yeah. So we are going to be moving on to the Wealth Woe segment, which is basically where one of the listeners sends in their dilemma and they just want to get your perspective on what they should do. And if you guys are watching and you want to send in something, the link to send it in anonymously will be in the description box. Okay, so I'm going to read. So this person says, if you are set to inherit property from your parents in the future, but they are having issues maintaining it now, is it worth helping them maintaining it before you yourself are fully able to afford to invest? As in, I could be paying off debt or saving for retirement. So what would you say?
So there's quite a few things to think about there. So number one, in summary though, I would say, yes, you should actually be helping them because at the end of the day, if you're going to inherit it, you don't want to inherit something that's already dilapidated, broken down, going to give you issues. So yeah, you want it to be in the best condition. I think the issue is going to be more about how much you help, how much you invest, because there will be some parents out there who try to get their children to like literally pay for everything. Like it's still the parents' investment. But if you're supporting, especially knowing that you're going to get it in the future, I think, yeah, why not? In terms of when you should be saving for paying off debt and for retirement, it's going to depend on the age of the person, right? So if the person's quite young, I would say, to be fair, the property should be or is hopefully going to be part of your retirement anyway. So you are actually killing two birds with one stone by doing that. In terms of getting rid of high interest debt, I would highly suggest that you do that. So I wouldn't say just help your parents, invest in their property and then you don't try to clear your debt or anything. So I'd definitely say you should be getting rid of that debt and maybe doing like a 50-50 thing if you can. But one thing I'd also say, probably a little bit outside of the scope of my typical accounting, is that make sure you have the right things in place to really inherit that property because there are a lot of people who think, oh yeah, it's my mom's property, it's my dad's property. When they pass away, I'm going to get it. Is it in the will? Do you have an LPA?
What's an LPA?
A lasting power of attorney, which is what allows you as the child to then manage the affairs of your parent. It doesn't have to be child parent. Most people use it as parent-child, but it can be spouse as well. Basically, in the UK, assuming this person's in the UK, not just back home in Africa or something, in the UK, if someone dies, you don't just automatically, as the child, have the right to then just inherit their property. There should be a will. If there isn't a will, it's going to have to go through probate. And then also in terms of managing their finances and stuff like that, obviously I'm thinking more about if the person passes away, as opposed to like, the person's still alive and passing it over.
Right.
But yeah, just make sure that you have all the necessary documentation. So like I say, many people think they're going to inherit their parents' property and the paperwork isn't actually in place for them to inherit it.
So then what happens then?
If they don't, you go through probate, which is basically like the government system of like saying whose estate is this, how much tax is going to be due, who could potentially be having interest in it. So it's almost like you're going through like a court case, but it doesn't happen in 1 month, 2 months. Most probate cases take like 2 years. Yes. And imagine if the property is still on a mortgage in that time, who's paying the mortgage? Yeah. So there's a lot to think about, basically. Yeah.
That is good advice. That is really, really good advice. And it's so interesting because even though I love to talk about generational wealth, I've never actually had the conversation about that part of actually passing it on. Yeah. So that is a really good point to bring up. And I also really like the fact that you said that saving for retirement, because this person was kind of conflating the two, like, should I save for retirement? Yeah. Should I be saving for retirement or should I invest in this property? But technically that property could either be the home that you live in for retirement or something that brings you in income during your retirement. Because we've had other guests on the podcast who have said they actually don't have like your typical retirement SIP or whatever. They have a property portfolio and that is their retirement plan. So I think that's a really good point to think about. And I would also say that it could be also, it does depend on, like you were saying, how much investment needs to go into this home. But it could be a lot easier for you to have this property be passed down to you than you having to save up yourself to then purchase another property. So that is also another reason to perhaps support your parents in maintaining that property. So yeah, that's good advice. I like that. I like that. Okay, so in this final section, I'm going to ask you 3 questions, and then
I'm cringing already.
And then I just want to get your response on, what you think. So, what is the best investment you've ever made?
Best investment is my little 1-bedroom flat that I bought when I was 25 years of age.
Okay.
And from that flat, I've been able to invest in other property. So yeah.
So what did you remortgage?
Yeah, exactly. Releasing equity. The flat is not nice. It is not special. Probably very dingy, but it's in a good place. So and the area has been developed. It's on a high street. So yeah, the price continues to increase. So yes, I'm a landlord that has benefited from price increase. But yeah, it's been a seed that I've been able to use to sow in other places. So that's been really good.
Do you know what? Yeah. Don't want to keep going. But you just, that little comment that you made about I'm a landlord that's been able to benefit from price increases. This is another thing about ownership. Like this is why, because I remember the last time, I don't remember when this was, maybe it was off the back of COVID when people were complaining about this going up and that going up. And I was thinking, well, you know what? One benefit of this is as an owner now, the price of my property has gone up. I've got equity now. I can raise the rents for my tenants to cover there's so much you can do, which is why ownership is important, guys. Okay, next one. What is the biggest money mistake you've ever made?
Still property related. So when I was a bit eager to get onto the property ladder, but I think it must have been before I bought that property. Yeah, it must have been before. But I wanted to buy a property in auction. I'm not even sure I've said this publicly before. Wanted to buy a property in auction and I won the bid, had the money. The money wasn't, in terms of like the deposit and stuff, that wasn't the problem. But then I didn't do my research properly and found out that the lease term on the property was quite low. And so the mortgage lenders didn't want to lend on that. So basically that deal fell through. But then because it's auction, you actually lose. People don't realize that you lose
the money.
Yeah.
Oh my God.
But that was just not the whole deposit. I think it was like 10% or something of the purchase price. But that was a very painful experience. But yeah, it taught me a lesson I will never forget.
Have you done a successful auction purchase since then?
No, so since then I've actually not gone back to auction. Yeah, not because of them, but I just haven't. Yeah.
Okay, interesting. Okay, and then the last thing is, what is one piece of advice you'd give to someone who is trying to build wealth?
Oh, yeah. Diversify. I always say it's a simple thing, but people don't realize. So let me give an example. One of my tenants called my husband and I literally last week, it's less than a week. I just wanted to call to ask you for permission to, I can only pay £500 rent today. We'll try and get the rest because my wife, she put her whole money in an investment and it turns out it's a scam. So she doesn't have any money and we need to like try and raise money basically. Now, why am I saying this again? What was the question? Sorry.
Advice for building wealth?
Oh yeah, advice for building wealth. So yeah, in terms of investment, don't put all your eggs, two things. Number one, you don't invest what you don't have. So you save to invest. People think you save for a rainy day. Yeah, you save for a rainy day, but you save to invest. And you only invest what you can afford to lose, number one. Number two, even when you are investing, you don't put all your eggs in one basket. That example that I just gave about the tenant, how can you take your salary that is supposed to be for your rent to invest? That's like, I'm sorry, but it's stupidity. Like, because you're investing, but you don't have a roof over your head. Like it has to be money that you can afford to lose because building wealth, as much as it's great when it works, it can be risky. And so you need to be informed when you're trying to build wealth, but also diversify. Even if you did, for whatever reason, think you're going to take your salary, you don't take your whole salary and put 50%. Ever heard about percentages? 20%? Test it out. Test the waters. There's also been investments back in the day that I've done as well where someone has come and said, oh, this is happening. Do you want to get in? Blah, 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 blah. And I have actually invested, but I invested money that I could afford to lose. And when it didn't come back, my life has still moved on. Like, I'm very okay. Like, I even had someone calling me the other day, oh yeah, there was a so-called investment that you did a couple of years. I even forgot about it. Oh yeah, we're doing this and that to try and help people to get the money back. I'm like, if you can get it back on my behalf, no problem. Oh yeah, no, you're going to need to do this. I said, I don't have time for that. Literally, that money is
just take
gone.
your money and go.
Literally, that money is gone and my life is fine because I didn't invest what I couldn't afford to lose.
And you know what? I bet you that tenant that you had, I bet you what they invested in was some sort of get-rich-quick scheme that didn't make sense. I bet you was like, if you gave us £100 today, every day for the next 10 days, we're going to give you £50. You're going to get 200%. And this is another thing. Well, this is not my question to answer, but building wealth doesn't happen quickly. Like people want get-rich-quick schemes to build wealth.
What I always say is that if it sounds too good to be true, it probably is. Like, invest with sense.
That is the end of the podcast. Where can they find you, Benedicta? If they wanted to hire you as well.
Oh, yeah. You can find me on BeniRatioFinances.com. That's BENIRATIO finances.com. That's my website. You can click all the buttons there, work with me, book a time, whatever. I hang out mainly on Instagram, trying to do TikTok. I am on TikTok as well. So yeah, Instagram, TikTok, a bit of LinkedIn here and there. But yeah, mainly my website. It has everything connected to it. So,
and
yeah.
I will link it in the description box as well.